What's going on, guys? My name is Hamilton. I'm here with the Trading Initiative, and in this video we're going to be going over a few new short ideas that just popped up on our scanners today.
Could have been on Wall Street, should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
Alright, what's going on, guys? So first things first, we're going to start with XLY, your Consumer Discretionary ETF. This has been under constant pressure since it peaked Q4 of 2021. You're going to notice that this is a theme over the next few charts. And realistically, we've been trying to short XLY for a while. As a matter of fact, we did actually short it when we broke down below this 185 level. It was not the most profitable short because it was very choppy, and therefore I believe we closed at a very minor profit when we did start to capitulate down here. But realistically, this bear flag that formed chopped up a lot of the premium on the original capitulation, and we were not able to hold. Having said that, this chart looks incredibly top heavy. This thing looks like it's ready to come back down once again. We have our original fib extensions that we were originally targeting being hit as support on the way down. Remember, on your way up, it's resistance. On the way down, it's support. But realistically, we're looking at most of these sectors to complete their round trip from the pre-COVID highs. And for XLY, this would be somewhere around that 133 to 132 level. Do we want to short XLY? Not necessarily. Like I said previously, we did try to get short on this 185 breakdown, and even though the RSI was confirming that this was a bearish setup, it was just incredibly hard to hold this through chop. And therefore, instead of trying to short XLY, we can go into some of the bigger names. For example, Amazon. Amazon is the second biggest holding within the Consumer Discretionary ETF, and we think this looks like it's fantastic opportunity to be shorting Amazon. So first things first, you see that we have our horizontal level sitting somewhere here around 279.89. Why did we choose this level? It corresponds with the resistance level on the way up, which means it should turn into a support on the way down. Seems to confirm that idea. We did bounce here at the 2800 level back in January. We bounced once again just very recently when Russia decided to actually invade Ukraine and the markets popped down. We found support where it was originally found. So once again, confirming this horizontal level that it is important. And then once again, tested it yesterday during that trading session, only to have it today break down below. So this has been on our radar for the last few days, specifically after yesterday's price action. As you can see, this is a very big move down. On a ticker with a 3.7 ADR, this thing moved 5.62%. That is a more than one ADR move. That means we want to be looking at where this is going. Now, we are breaking down below this horizontal level, and so we want to be short, confirming that the RSI is below 50. Everything sets up for this to be a green light down to this 2184 area. But do we realistically want to target that when we're looking for plays? Not necessarily. Listen, I don't care if the chart's set up perfectly. Amazon is not going to be the cleanest name to short, has huge institutional buyers, has a lot of retail interest, and so we want to take a more conservative target when we're looking to short Amazon. Realistically, we're looking somewhere in between the 24.5 and the 2400 range, which still gives us, assuming we do not just completely capitulate tomorrow morning when we open up, somewhere around the 2700 range, it does still give us a nice double-digit spot drop, up 10 to 12%, depending on where you want to actually put your price target, which absolutely will cause any sort of put position, whether it's a put debit spread or just straight puts if you're a baller and can afford it. These things will appreciate like crazy. Really quick though, if we do want to take that original PT off the 1.618 at that 2184 level, that is nearly a 20% spot drop, and that would coincide with the pre-COVID highs, which is what we were just talking about with the Consumer Discretionary ETF XLY. So this looks like a fantastic opportunity. If you want to short Consumer Discretionary, Amazon has lots of volume. You can find a play. It is a little bit more expensive. If you want to spread it, make sure that you confirm both strikes have volume. Some of them do not. Some of the weird numbers do not. So make sure it has volume so you don't get stuck in a spread. And you know what? Short the shit out of Amazon down towards this $2,400 level. Now, the next name we want to look at is ticker XRT. Once again, we peaked around the same time, Q4 of 2021 in November, and since then has been in a constant onslaught. So once again, we did try to short XRT at around that $90 breakdown. We did happen to get out at very minor profit, but we were unable to hold for the majority of the move because, let's be honest, it's just not a clean downtrend in the grand scheme of things. days. Imagine holding a position for 30 days during consolidation. Generally speaking, that will eat up a lot of options premium, and we were not willing to hold through that consolidation. Therefore, we did get out with a minor profit, but once again, XRT is setting up horizontal levels to break down. We have this beautiful rounded top, and we have a horizontal level somewhere around $73.5 down towards $72. We want to be short XRT anywhere below this area, $73.50 to the downside and 7,200-ish, something like this, somewhere around that area. We close below that, we want to be short, and we want to be following these fibs down. 62.85 is our first profit target. If we do somehow enter in right at 72.5, we'll say that does give us, once again, a double-digit spot drop down, 13%, 14%, and any sort of put play, put debit, or regular puts will appreciate like crazy. Now, this is a little bit cheaper. Actually, it's a lot cheaper than Amazon, and the IV is lower than Amazon. Therefore, those straight puts make a little bit more sense than possibly a put debit spread when you're trying to negate some of that IV crush that may come in, all right? So XRT, we're looking at a 62.85 profit target down towards that $60 range. We feel like that's okay. We want to go out a few months, not necessarily expecting this to capitulate tomorrow, but on a 3.5 ADR move and expecting this thing to move about 13-14%, knowing that usually we're not just going to get a straight 14% dive on ETFs. This thing could take, 20-30 days to play out. Therefore, we're looking at a month to 2 months out expiration, but we want to target that 62.85. One thing I want to point out, which is pivotal in the TTI swing trading system, is if we are below that 50 RSI, we want to be looking to go short. XRT has been pinned below the 50 RSI since Q4 of 2021. This is a fantastic short setup, and therefore we already are short XRT, some of the members, and if you're not, you should be looking to go short. I believe a majority of us opened up some 60 puts a few months out. Feel free, look at the chain, find your play, and make sure it makes sense to you on the chart as well. Now, realistically, anything above the $77, $78 level, if we bounce, we want to close those contracts, grab whatever premium is still left on them, and move on. At that point, this trade idea is invalidated. Last thing I want to point out here, if we dive into Koyfin and actually look at XRT going back 1 month, we can see some of the names that are in here. Some of the higher weighted names. Kroger recently hit an all-time high. You have Sprouts Farms, which has been performing very well. You have Albertsons, which has performed very well. These names are carrying XRT, but if we go ahead and sort through by return, we see some of the absolute behemoths that are causing XRT to break to the downside. Mainly Carvana being down 35%. Now it is only 0.48 of the ETF, but 35%. You have Vroom at 65. You have Real, Abercrombie and Fitch, Foot Locker, Stitch Fix, Barks. These are names that people traded in 2020 to the upside and made quote unquote millions. These things are down huge. So if you want to dive into Koyfin and see what's been working and what hasn't, if you're looking to short, here's a hint. Every TTI trader knows this. You do not want to be buying short the names that are showing relative strength when the ETF is being pulled down. Generally speaking, these will eventually follow the prevailing trend. They're just a little late to the party. You're going to want to look at some of the stuff that is already breaking horizontal levels to the downside, and I believe you're going to find some awesome names in names like Wayfair, possibly Macy's. The hard part about XRT is finding volume on the chain, which is why we want to just look at the straight ETF, not necessarily go into these individual companies. I believe one of the members in TTI is short Nordstrom's. Apparently there's some volume there. You can dive through this. I implore you guys to do your homework if you want to be short the retail sector, and it certainly looks like you want to. You're going to want to go through Koyfin or at the very minimum the ETF holdings and figure out what names look the worst. Guys, if you like stuff like this, please like the video, subscribe to the channel, leave me a comment, let me know what you think. Do you want to be short Amazon right now? Do you want to be short retail? And if you like this sort of content, click the link in my bio. We do this stuff all the time in Discord. We provide trade signals. We provide in-depth analysis, 3 times mentorship meetups per week. You can learn how to trade. You can take the same trades as us, etc. We look forward to meeting you, and I'll catch you in the next video.